Welcome back to the Tasty Crypto Show. I'm Dan Cecelia, and today I'm joined by Young Chu, CEO of StablecoinX, the first publicly traded treasury company established to focus on the Athena stablecoin ecosystem. Young is a CFA Charter holder and brings over a decade of experience in leading both traditional finance and crypto companies. Young, welcome to the show.
Yeah, thanks for having me, Ryan. Thanks for having me, Dan.
Yeah, for sure. Let's just jump into it because I think this is a really interesting topic. Stablecoins have been hot in the news, and we've integrated them on our platform. So, what drove the decision to create a treasury company specifically for the Athena ecosystem? Why is this model more appealing to investors over a direct investment approach?
Yeah, so I started this journey. I've been in crypto now for about 8 years. Before that, I was in traditional finance for over 12 years. Started my career at Citigroup. But as I was talking to you before, in the past, I was previously CFO of Hedera Hashgraph. Before that, I was chief investment officer at Abra. But it's just wild. It's just wild how much we've progressed over the past 8 years in this space. And so recently, just about last year, a friend of mine asked me to join as CEO of TLGY Acquisition Corp, SPAC. He's also been in traditional markets in the past. He's been in SPAC world for about over 18 years. And he brought me on board to head up TLGY to look at what we can do in the crypto company with the new administration. And so we were talking late last year, and we saw what MicroStrategy was doing with strategy, obviously, what Sol Strategy, what Leah Wald was doing with Sol Strategies. And we thought we could improve on that model, right? So what those guys are doing is basically buying crypto at spot, putting it into a company, and essentially, just having that listed vehicle ride on the beta of those of Bitcoin or Solana. But coming from the layer one protocol at Hedera previously, I thought we could improve on that because a lot of these projects are looking for two things, right? I mean, they're looking for a public market advocate to help them get the word out about their protocol beyond just the crypto community. And so that's one thing that I think a lot of foundations in the crypto space are looking for. And the other thing is for investors, they're looking for a decent return, right? So being, again, historically at Hedera, we sold tokens at a discount, anywhere from 30 or 50%. OTC, and they're locked tokens, and we sold them to investors, hedge fund managers, VCs, and we thought we could create some value to investors by being able to create a digital asset treasury company, buy these tokens at a 30 or 40 or 50% discount, and then have those investors or shareholders benefit from that discount that we're purchasing these tokens at. So that's how we came up with the idea. That started late last year. We've been talking with several foundations in the space. And when we came across Athena, we thought this would be a fantastic partner to work with. Just the fact that they are in the stablecoin space. We know that Circle is coming up with their IPO in the next several months. This is early this year. And so we saw their S1 filing. And the stablecoin narrative is a pretty simple yet very compelling narrative to give to Wall Street and Main Street. So that's how we came to where we are. We signed an LOI with the Athena Foundation back in April, and we got the definitive merger agreement with them back in July 21st.
Awesome. Yeah. And I think it's a really interesting insight. It's an awesome story, by the way, just kind of the background and how this came to fruition. And, if you're a crypto native like I am, like you are, even you're following the space, obviously Athena was kind of a big name in the stablecoin space over the last couple of years. So it's getting more traction now. Obviously, stablecoins, to your point, have been, accepted widely with this new administration. And, I'm curious, I read in the press release and doing my research, you guys raised close to 890 million in financing to go on and purchase the token ENA, which is the protocol token, USDE being the stablecoin. This is a huge bet, obviously, and makes you the largest holder of ENA. So can you just walk through that ENA investment thesis for us?
Yeah, so like I mentioned, it's there's a great shift happening in the stablecoin market, and we call this a stablecoin super cycle, right? The Treasury Secretary Scott Bessent, he expects stablecoins to grow from I believe right now it's just under 300 billion, right? Because there's been a massive rise in USDE over the past month or two. So now we're close to about 300 billion. And Treasury Secretary Scott Bessent expects stablecoins to grow to about 3.7 trillion by 2030. So that's a 12x increase in just the total addressable market in the next 5 years. On top of that, the yield-bearing stablecoins, they're currently about 5% of that 300 billion. And there's been research reports out there from JP Morgan that estimate in a bull case that the yield-bearing stablecoin market could grow to about 50% of the stablecoin market in the next 5 years. So you're seeing, not only you're seeing a 12x increase in the TAM of stablecoins, you're potentially seeing a 10x increase within the stablecoin market of yield-bearing stablecoins growing to be half of that $3.7 trillion market. So that's a massive compounding effect. And we think that is by the definition of what the stablecoin supercycle is. And Ethena and the Athena protocol is well poised to benefit from that.
Yeah, no, it's a great point, and I think any investor, right, when they look at this asset class or they look at stable coins and they think, I want to yield, right? That's kind of what investors are looking for. And circle, USDC, some of these traditional issuer stablecoins, USDT, they don't pass that yield on. So I think that's where, if you do the research into Athena, that's where kind of it stands out. So, it's a great point and definitely something that, sets it apart. So for our audience they're typically familiar with traditional derivatives, options, futures, can you explain where that yield comes from? Can you kind of dig into that a little bit, that delta neutral approach?
Yeah, so this is a pretty common strategy that's run by a lot of hedge funds in the crypto space. It actually came from the traditional finance guys. They've actually done this with US Treasuries. And so what they do is they typically sell the futures and buy spot. And that's in TradFi. But in the crypto world, what a lot of these hedge funds have done in the past, and because there's a pretty nice premium with it, they sell Bitcoin futures and then they buy the spot Bitcoin. So they're hedged, right?
Right. So
whatever happens to the price of Bitcoin, it's always delta neutral because it's hedged. You're buying spot, but you're selling futures. And there's a premium to futures because typically people pay for that premium because they're getting leverage on those Bitcoin futures. So that's what the Athena protocol does. They sell the Bitcoin futures and then they buy the spot. And then they pass on that difference, that premium that you're earning, that you're gaining from that selling the Bitcoin futures. They pass it on to the USDE holders. And so that's what's called the delta neutral hedged position. And this is very common with a lot of the larger hedge funds in the crypto space. And this has been proven in the TradFi with US Treasuries, like I mentioned before. And so that's where the yield comes from.
Gotcha. Okay, so it's kind of like a carry trade in other words,
exactly.
And so digging that a little bit, and I think investors, a lot of them want to know how to value things, especially in crypto, right? Sometimes it's vague, especially if you're coming from TradFi. Maybe they want to value it on fundamentals, but there's not often one-to-one fundamentals with TradFi. So with this ENA, StablecoinX. In ENA, what would you say you would value that on for investors? Like, is it token price? Should they look at protocol revenue? Obviously, the carry trade's a big component. Or is it just a broader bet, to your point, on stablecoin innovation and adoption?
Yeah, so for valuing StablecoinX, I mean, you got to think about it like in two different ways, right? There's the beta component, right? Basically, because we are a big treasury company of the ENA tokens. But then also there is the alpha, right? And so that alpha will determine at what sort of premium to MNAV we trade at. The NAV is going to be based on entirely by the price of ENA tokens. So that's what I call the beta component, right? And so the ENA token price is driven by a lot of things. It's driven by the growth of the USDE. It's driven by the USD users of the Athena protocol, the protocol revenue itself, and increased distributions of USD on more wallets like exchanges. Like they had a recent announcement with Binance where they're basically partnering with them to quote a lot of the cryptocurrencies in USD. So there's all that. And that to me is what determines the MNAV. And that is the biggest component of the StablecoinX price. And that's the beta, right? But then the second component, like I mentioned, is the alpha. The alpha is really how good of a job that we do, the StablecoinX management, in terms of getting more Ethena tokens per share for shareholders. And so that's things like we intend to stake our Ethena tokens onto the validator network, on the Converge network when it launches. We're also looking at different ways where we can potentially earn yield by maybe even buying USDE and taking out debt so that we can, well, the debt's got to be at a lower cost than the yield we can earn on USDE. But there's things like that we're thinking about. And then also we have a collaboration agreement with the Athena Foundation. It's a 5-year collaboration agreement where we have a right of participation to participate in their future discounted token offerings that they provide to the OTC market. So we can purchase, Ethena tokens. We purchase tokens at a 30% discount in our previous pipes. But going forward, we have a 5-year right of participation, continue that, buy more Ethena tokens at a discount. And then that's one way we can accrete value to our shareholders. As long as we're buying these Ethena tokens at a healthy discount versus then the shares that we can issue at. If we're issuing shares at a 1 times MNAV or 1.1 times MNAV, and we're buying these tokens at like a 30 or 40% discount, we're accreting value to our shareholders that way. So that's how, those are the 3 different ways we can earn alpha on the Ethena token so that we can trade at a premium to our MNAV.
Yeah, no, that makes a ton of sense. I appreciate the illustration, and you simplified it a ton. And I'm actually interested. You're going to go out, and it sounds like you'll go out and actually try and run some DeFi strategies. So would you to try and earn a little bit more of the yield? Would you be using like Aave, or would you be going out like Pendle is another one I think is interesting, or is that kind of something you're still figuring out?
We're still figuring that out, and we have to be careful because we are going to be a listed company.
Sure.
And so some of these protocols that you mentioned don't necessarily run the right KYCs.
Gotcha.
And so we have to be careful on which particular platforms we decide to run these strategies on. But yeah, I mean, we're exploring all those different things, but we have to be mindful that we are an SEC reporting company.
Of course, yeah, for sure. So, I think when I hear yield-bearing stablecoin, I think other crypto natives, when they hear yield-bearing stablecoin and carry trade and some of that, we look at maybe, you think of like Terra Luna, you think of some of these other blowups from last cycle. So a lot of critics will point to like the funding rate risks of the perps markets, futures markets, exchange counterparty risk. Obviously, you pointed to the protocols not running KYC, regulatory oversight risks there. So how are you addressing these risks and mitigating them at being, the largest CNA holder?
Yeah. So, I mean, we've come a long way since the Terra Luna debacle. And, that was an algorithmic stablecoin. This is a synthetic collateralized stablecoin with the future spaces trade as its collateral, like I mentioned. But there's the ways that we mitigate risk is, there's a lot of different things that the Athena protocol can do itself, right? And then there's the things that the StablecoinX does as a participant or as one of the larger holders of the Ethena tokens. But just to kind of broadly talk about those different topics that you mentioned. So the funding rate is one of the risks. It's historically been mostly positive. It's ranged anywhere from 5 to 25% over the past 3 years. But the funding rates do from time to time go negative. And the Athena protocol does have a reserve to buffer losses when rates do go negative, right? It usually happens, I think in the past, it's happened about 10 or 15% of the time, right? So they also can close the future spaces trade and purchase USDTB to fund those, yields to USDE holders as they wait for the, funding rates to go from negative to positive. By the way, the longest that the funding rates stay negative is about hasn't been longer than 13 or 14 days.
Oh, wow. Okay. Yeah.
So I mean, but this is something that the Athena protocol does itself to manage those risks. But we, as largest holder of the Ethena tokens, we participate in the governance, right? The governance of the Ethena protocol. And so we don't manage directly those types of decisions. We can basically, participate in any sorts of decisions or any sort of votes that come up where we can either appoint or maybe, give suggestions or change some of the risk committees within the Athena protocol, but we don't directly manage that ourselves. Right.
Gotcha.
So that's, as a large token holder, that's how we can mitigate some of the risks. Then there's also questions about the counterparty risks, right? Because the Athena protocol is running these features basis trades on various exchanges. Well, the exchange that they run, the biggest exchange that they run on is on Deribit. And Deribit now, as you know, is they're owned by Coinbase or merging with them, and they're going to be a $80 or $90 billion market cap company when they close a merger. I think they already closed, actually. So they are, the counterparty risk there is pretty mitigated in my opinion. So there's various different things that are happening, but we've come a long way since those Terra Luna days. And in fact, when the funding rates do go negative, when you close those positions, there is this kind of mean reversion, right? Back up to, that's why the funding rate hasn't been negative for more than 1 or 2 weeks. So that mean reversion does allow the protocol to get back into a positive funding rate environment.
Gotcha. Yeah. And like we were talking about before the show, like we've come a long way since we both entered the space, and, liquidity, we've seen more liquidity come to the space. Obviously, with the positive regulatory environment currently in some of the, regulations passed here in the States, it makes it a more trusted environment to operate. And then Coinbase, some of these counterparties you talked about, they're well capitalized, right? So that as a participant, that makes me feel pretty good, and obviously come a long way since last cycle. So I want to get into this stablecoin super cycle narrative and dig into this a little bit, because here at Tasty Trade, we're traditional finance first. We provide access to derivatives, futures options, forex. And stablecoins was one of the big things that we've implemented and seen a huge boost with not only current clients but new clients funding. So I want to know your opinion on what's driving demand for stablecoin adoption, and then how Athena kind of fits into this.
Yeah, so as we've seen, there's a lot of institutions that have been kind of waiting on the sidelines. Banks in particular, we're kind of joking about this, like if you're old enough to be in this industry 5 or 10 years ago, you probably had your bank account shut down a couple of times, right?
Yeah.
But now banks have been waiting for regulatory clarity. They have it now with the Genius Act, and banks and institutions are just starting to dip in, right? That's why we've seen just in the past 2 months, man. I mean, the stablecoin market cap grew from 250 billion to 300 billion, 50 billion in just a couple of months. And you're seeing more and more institutional adoption. So that's what's really driving a lot of the growth in the stablecoin super cycle. We've seen, the Genius Act was passed, this is my opinion, because the stablecoin industry participants are now the 12th largest U.S. Treasury holders in the world. And when you have a lot of these sovereigns that are a little uncertain about holding U.S. Treasuries, or a little uncertain about the geopolitics with the Trump administration and the tariffs and all that, China, I think they're not a net seller, but they're not renewing. They're not buying any more U.S. Treasury. They're not buying as much to redeem or to replenish. So a lot of these countries are starting to dip down in terms of their U.S. Treasury holdings. And you see this little industry participant called Stablecoins and Tether and Circle and some others that are now going through up in the ranks of U.S. Treasury holders. And so, in my opinion, that's why I think the Genius Act was a priority for Washington. And with that, you're seeing a lot, now that you have that clarity, a lot of the companies, a lot of banks, a lot of sovereigns are paying attention to stablecoins. And so I don't think that's going to slow down anytime soon. It's going to continue. You're going to have other countries doing the same thing, passing something similar to the Genius Act, and you're going to see a lot of adoption here.
Yeah, no, it's a great point. And, obviously if you're in the finance industry and, you follow some financial media, there's always this talk about, government debt, and I guess some of these sovereigns are reducing exposure, and then if you're in crypto, you're realizing, oh wow, these issuers, these stablecoin issuers, they are the buyers, and they're the big buyers, and nobody, if you're outside of the space, nobody's really paying attention until obviously this year to these issuers. So yeah, the regulations had to catch up, the laws had to catch up. So I think it fits with that stablecoin super cycle narrative. And you mentioned Circle. Circle was a massive IPO. I saw it here at Tasty when it went live, on the trade desk, some of that stuff, kind of how it traded, beginning during its IPO, and obviously Tether, right? And Tether just launched Plasma. It's the biggest stablecoin, US dollar Tether being. And so I'm wondering, how do you view competition from those players? Obviously Athena is a little bit different, but there's those incumbents and then the new entrants. So how do you view that competition?
Yeah, so they, like you mentioned, they are different. USDC and USDT, they don't offer yield to their holders. They keep it all themselves, right? So we don't necessarily view them as competition. In fact, Tether, they're very complementary to Athena, right? So USDT, they comprise about like 15 to 16% of the collateral, or we have the Athena protocol has a redemption liquidity pool so that they can stay liquid and they can have people that are redeeming, they can pull their points or their cash out through USDT. So they're very complementary in that regard. So we don't really view them as competition. But there are new entrants. We encourage that. There's more innovation to come. We're just scratching the surface, right? And so even though Athena is the largest yield-bearing stablecoin with roughly about 4 or 5% of all the entire stablecoin market, there's definitely a lot of room for new entrants to come in. And so we haven't seen any other compelling other protocols, but I'm sure there's going to be some. I'm sure there's going to be others. And we have many years to run wait until we get to a $3.6 trillion market, $1 trillion market cap in stablecoins, 50%. I mean, there's so much room for others participants to come in. So we welcome that.
Yeah, no, I think rising tide lifts all boats in this space in some respects, and obviously you want to keep the bad actors out, and so obviously encouraging and working with each other, like you said. Tether makes up a portion of Athena. It's good. It's positive for the space. I've been in the space since 2017. I know you've been in longer, and just seeing people, seeing the way it's developed, and seeing how these protocols kind of work together. We should welcome some of these new entrants, some of this competition, and hopefully it'll grow the space even bigger. So I guess if we look ahead, right, and you talked about, you guys are well capitalized, you have a long runway, multi-year outlook. What would need to happen in the Athena ecosystem for StablecoinX and what you're doing here to be considered a major win?
Yeah, so I mean, like I mentioned, the past two things, it's the Ethena token price performance. If that is our biggest driver of our stock, because that is what our MNAV is benchmarked against, right? So if the Ethena token performs well, we do well as StablecoinX. So that's one. And those things are driven, like I mentioned before, like growth in the USDE, user growth in the Ethena protocol revenue increasing, distributions of USDE, all that stuff is what we would love to see. And the other thing that we would love to see and would consider a win is if we increase our Ethena tokens per share. That is how we get that extra bit of juice to go from just a MNAV benchmarking the Ethena token price, but if we trade at a slight premium because we're able to grow the Ethena token per share, that would be also another huge win.
Gotcha. Okay, so we have to look at MNAV, have to look at Ethena price. Like we mentioned previously, that's kind of what we're benchmarking and what we'd like to see, what you'd like to see over the next couple of years. So, being in crypto for so long, you always get kind of the skeptics, right? Or you get, why should I buy this? Or it's, all the stories, all the critics. So what is your message to traditional investors who might be hesitant about this approach to stablecoins and crypto exposure?
Yeah, so I mean, for TradFi investors, which is the market that we're targeting, right? Primarily on top of all other crypto investors, if you want exposure to explosive growth, right, expected in the stablecoin market, there's only really a couple investments you can really make, right? So there's Circle, right? There's Circle stock, which is now trading at, I think, about 130 PE or something like that. I mean, they had a phenomenal ride. They went up to about $50 billion market cap, and now I think they kind of settled somewhere around 30 billion. But they're still, I mean, this is not investment advice, but if you ask me, it might be a little rich at 130 times PE. And so there's you can invest in that, or you can buy StablecoinX stock. StablecoinX stock, we haven't gone effective yet. We expect to sometime in the next several months. But when we do become effective, there's going to be now potentially 2 different types of vehicles or investments that you can deploy your stablecoin investment thesis into. And so we think that is going to be an interesting dynamic between. We think some of these things will probably trade at close to MNAV or maybe slightly above, but this is where investors that are in traditional finance, if they want to express that stablecoin narrative that's thematic, there's really only a couple investments that they can make. It's Circle, the StablecoinX, potentially in the next couple months.
Gotcha. Yeah, we'll definitely have to look at that, and I'll be following it closely as you guys progress to get listed. So we got a minute left. I just want to allow, where can our audience find you and follow along after today's show?
Yeah, so we're on X. The Twitter handle there is @stablecoin_X. We post there pretty regularly, so there's a lot of posts that we make about what's happening with the Athena protocol. We give them updates on what's happening with us particularly. So you can follow us on X. That's the best way to follow us, sir.
Awesome. Yeah. So, Young, I appreciate it. This was a great conversation. Would love to have you come on again. Maybe as you get closer to listing, always down to chat. Love hearing about this. It's really interesting, and I wish you luck. And I'll definitely follow along. As you guys get closer to listing.
Thanks, Dan. Thanks for having me.
All right, that's it. We'll see you guys Wednesday. I'm Dan. Peace.